Markets are continuing the sell-off as they look forward to Jay Powell's remarks at Jackson Hole, and therein lies the problem, is the Fed's credibility. Nobody knows what to expect out of Jay Powell at Jackson Hole and what he's going to choose, which battle he's going to pick. Is he going to pick inflation, getting inflation down, or avoiding a recession? So the Goldilocks solution, where there's a soft landing, the just right, not too hard, not too soft, not too hawkish, not too dovish. So that's what the markets are waiting for. But right now, markets are down, about ready to close here in a couple of minutes, 642 points or 1.9% on the Dow, 2.15% on the S&P, and 326 points or 2.57 on the NASDAQ as we speak. Bond yields are up today as well, which is another indication of what investors are feeling. The 10-year Treasury yield climbed above 3% for the first time in over a month, which will affect mortgage rates. It will increase mortgage rates, so you're going to see more housing declines as the 10-year Treasury increases. But bond investors are looking ahead to the Jackson Hole Symposium. The move comes ahead of what could be a volatile week for trading. Investors are anticipating U.S. Federal Reserve Chairman Jerome Powell's latest comments on inflation at the central bank's annual Jackson Hole Economic Summit. Yields fell and then rose at the end of last week as markets mulled over the Fed's released July minutes, which didn't really say anything different than what Powell said at the last meeting when he discussed the Fed's decision. We have some continued issues here in the meme stock frenzy that's been going on. AMC shares dropped 40% as Regal Cinemas warned of bankruptcy. So let's jump in and take a look at that. And I've got a funny little anecdote there on the meme stock frenzy. So here is AMC right here dropping 40% from where it was the other day. It was up as high as $27 recently, and then dropped down to 18, and then ultimately sold off. This was that little pump that we've seen here since the June low. So it'll be interesting to see how AMC rebounds. But the funny thing is, a lot of us spend a lot of time going through the charts, researching, looking at trends and technicals, and going through, investor earnings calls and things like that, researching. And it's funny. My wife comes in the other day and says, I was playing around. I put a couple $100 in my TD Ameritrade account. She hadn't been using that or doing any trading at all. We don't even talk about it really. But her son was using it, so he showed her how to set it up. And she put a couple $100 in there, and she said, I'm actually up to $294 now. And I'm like, what? It had been like a month. I'm like, well, what did you buy? She said, I was doing a little research on some drug companies, and this MNMD, Mind Medicine, came on her radar. She was looking at psychedelics to treat neurological disorders and autism, things like that. And she found a couple of companies, and NMD just happened to be one of the companies that she found, and she bought it back here at about 75 cents, and it popped up all the way to $1.44. And I was like, wow, that's a pretty good return you had there. And she didn't, had no idea what was going on. So what drove this pump was the investor that drove the Bed Bath & Beyond pump. There was a student, a 20-year-old college student, that borrowed $25 million from his friends and family, created a little fund, and made a little Bed Bath & Beyond play. And he had no idea what was going to happen. And on the whole Michael Cohen situation, where Bed Bath & Beyond got this pump the other day and jumped up about 500%. So the 20-year-old ended up making about $130 million while this pumped up. And then, obviously Bed Bath & Beyond is working its way back down. And the same young college student also took a position in MNMD, Mind Medicine. So word got out that he took a position in there, and some people thought maybe he was involved somehow in the the Bed Bath & Beyond pump. So anyways, just a funny anecdote. You can spend all the time, watching the charts, doing technical analysis, and just, waiting for that right entry all day, every day. And you have two situations, one with a couple $100 that turned into almost $300 in less than a month. And then on the Bed Bath & Beyond, 25 million turns into 130 million. Same thing. He thought it was going to be a 6-month play, ended up turning into a 30-day play that he turned that. I think it was 30 days, maybe 90 days, that he turned that into about 130 million. So Meme stocks can be good and they can be fun, but they can be your enemy as well. So you got to be careful. Here's the Dow Jones continuing its unwinding of this bear market rally like we've been talking about. And these things happen quick. It seems like maybe this is just a little correction on this, recent rally. But next thing you know, you can be testing these lows again, which is what seems to be most likely is that, especially if the Fed continues to take a hawkish position and continue to battle inflation, which they have to do. They cannot let inflation continue to run out of control. We're going to get the inflation report next week, I think, and then the Fed's going to meet after that. Most likely right now, they're going to indicate that they're going to continue their rate hiking, 75 basis points. And not only that, but leave rates up. They're not going to be able to unwind anytime soon. Inflation's not going to come back down to that 2, 3, 4% target anytime soon. And the Fed funds rate's going to have to go higher than they're thinking in order to get that down. And the credibility of the Fed is on the line with all of this because they just have no faith in Powell or the rest of the Fed members that they have any kind of idea what's going on. And when he said we'd reached neutral at his last meeting, basically what he was saying is he was still saying that inflation was transitory, and that's why the markets are unwinding like they are. The VIX is on the rise, and as you know, when the VIX is up, that's the time to buy. When the VIX is down, that's the time to sell. Generally, there's a lot of other factors there, but when you see VIX at low levels, that's generally the time when you potentially want to buy. When VIX at the top, that's when it's time to get out. When VIX is down, look out below. When VIX is up, it's time to buy. So this, obviously when the VIX is low, that's the time to sell. When the VIX is high, that's the time to buy, is kind of how it goes. The saying goes. The dollar has also been up here last couple of days. Oil is a big one to keep an eye on. Oil could potentially, let me take this off log. Here we go. I had it on log scale. I got to go back and look at this, but oil has been dropping, but the Saudis came out and said, well, we're going to limit production. So we might see oil spike back up again. A lot of people are calling for $120 barrel oil again. So we'll just have to wait and see what they do, if they actually take action on their threats as we look at that. So let's take a look at Bitcoin here as Bitcoin continues to work this trend line that we've been following. Kind of finding support there, dancing along this little lower trend line here. The important level here is this last low right here. As long as this last low right here holds, then everything will be fine for Bitcoin. But once this low breaks, then that's when you're going to potentially see the retest of this low back here. So it's just levels that Bitcoin's working on, very similar to what we saw over here, very similar to what we saw over in this range. Once these levels crack, then they reach down to the next level. And we've been looking at where we're expecting the test to come in there. Let me get rid of this here. Let's move this up like this so we can take a look. So if this breaks down, obviously what we've been eyeballing, I'll talk about these vertical lines here in a minute, is this next level here. If you break the 17.5 to get down to that 15.5 range, 14.5 to 15.5 range, that would be your next level down of consolidation, kind of like we've been doing here. We did here, upwards levels in those areas right there. So let's take a look at, let's remove this right here, remove these little drawings real quick. We'll take a look at the moving averages, see where we're at there. And what I had marked out was on the monthly, I had marked out September on Bitcoin and just kind of looked at the last, over the cycle of Bitcoin's history. 4 out of 12 Septembers were up, 8 out of 12 Septembers were down. So if you go back and look through the chart and look at all of the previous months of September, you can see that they've always been down for Bitcoin. So there's September 21 was down, September 20 was down. We'll go back to September 19, obviously August, September, October, November, December, January were all down for Bitcoin in 2018. And then back before that again, your 3 up months or 4 up months were in the early days of Bitcoin's history after 2014. They were all Septembers were down. Some of them not so much, but this is a big one here, August, September, October, November. And if you look at right here, August, September, if we follow that pattern, let's just kind of take a look at what that did from August peak to trough was a ultimate basing decline of about 57%. So what would that look like if Bitcoin dropped from the top of August? Let me see, did I just do that? Peak to trough. Yeah, 54% from peak to trough in August through the rest of the year. So that would put Bitcoin right down around that $10,000, $11,000 range. A lot of technical confluence that says that Bitcoin could potentially test those levels. So we will have to wait and see what that looks like. Here's the 200-week moving average. Bitcoin continuing to lose the 200-week moving average right there. If we go to the daily, lost the 50-day moving average. And then on traditional markets, the daily moving average, obviously we looked at this the other day where the Dow Jones popped up and rejected the 200-day moving average. NASDAQ never quite made it. S&P ricocheted off of it and rejected off of it perfectly. We went back in history and we looked at these moves here in terms of this rally and this rejection in pretty much every index. When you go back to the last bear market of 2008, right here, from the peak to the peak of this rally, the first real big bear market rally, it's the same amount of days. Basically, this would be from the peak of the market here to the peak of this was about 32 weeks. And not for quite there yet. Let's take a look at peak here to peak here, right at about 32 weeks. So all three markets did about the same thing, and the bounce was about the same. This one was probably a little bit more. This one was 19% back in 2008. That bounce, first big bear market bounce, was 15%. So this one went a little higher, and I think all three indexes did the same thing on the Dow, the NASDAQ, the S&P. We saw the same thing in 2008. This peak to peak, from the peak of the market before the bear market decline to the peak of the first bear market bounce, was the same amount of weeks, and it was the same percentage rise within a couple of percent before it went on ultimately to the to finish off the bear market. So we'll have to see if the market continues to follow this pattern, but so far they're stacking up almost identical. Let's take a look at Bitcoin on the hourly. And again, what we're waiting for is confirmation on this hourly trend to see if Bitcoin continues to hold up or takes out this low. Oh, one other thing to look at is what a lot of people have been looking at here lately is the hash ribbon buy indicator has flashed on the daily, but not on the weekly and not on the monthly yet, but it did flash on the daily. So the question is, generally this is meant that the bottom was in somewhere before this blue buy signal flashed, and it may be a little while before the market continues on, but generally on the hash ribbon buy indicator, any time before here was a good buying opportunity in the market. Never really went below that except for back in 2019 when it broke below the previous level prior to that. But of course, that was the 2020 pandemic situation. So last cycle, when the blue buy signal flashed, it was on to a new all-time high. Very different market conditions back there than now. So it'll be interesting to see if price holds up now since this is flashed, or if it goes to take out this low, because that's something it has not done. It has not gone back and taken out a previous low after flashing before running to a newer high, other than 2020. And what you could see is March of 2020. So prior to that, the blue hash ribbon buy signal flashed right here. This is where I believe the new bull market phase was beginning, and then the pandemic kind of derailed it. So that one broke the previous low when this signal flashed, obviously, but then there was another one, and then it was off to the races from there. So something like that could potentially happen, where you've got this blue buy signal that flashed, market could consolidate a little bit, maybe pop up a little bit, and then ultimately capitulate again before clearing out. The issue that we have right now is we're in a global macroeconomic bear market cycle that's just beginning. Countries around the world, in Europe, other countries are facing recession. They're facing extraordinary inflation environment that are going to affect earnings. It's going to affect production. It's going to affect a lot of things. So right now there's a whole different risk profile, a whole different liquidity profile, and a whole different interest rate environment that we're in right now. So a lot of headwinds out there. The markets have had a nice bounce, a nice rally. So we will have to see if this is going to be a corrective phase to that bounce and then continuing on, or if it's going to continue into a longer term bear market. And right now, the most probable outcome is a longer term bear market. I know a lot of the analysts, a lot of the pundits out there are saying any dip is a buying opportunity, but that's bull market. When you're in a bull market, you buy the dip. When you're in a bear market, you buy the dip, you become the dip. So you want to be careful with that. Of course, you could dollar cost average if you bought in higher. You want to dollar cost average on your way down, reduce your basis, and you're a long-term holder. That can work, but you have to be careful because we don't know how long this is going to last. We don't know how deep it's going to go. So you have to be aware of the risk. You have to preserve your capital so that you have the funds available when the market does turn and as bull market back on. So those are the things I'm looking at. I'll see you on the next video.